lot of focus on the housing and the housing finance segment, given that a lot of stops have been announced in the budget. For this, we spoke with Ashwini Kumar Hooda. He is the Deputy MD of Indiabulls Housing Finance, and we asked him that the budget had a lot on the real estate sector, FDI in realty and tax offs of REITs and the pass-through status. How does he see these developments?
So from a real estate perspective, the whole championing of idea of 100 smart cities, and as a corollary to that, allowing FDI in projects where affordable housing is more than 30% and reducing the commitment of the total areas to be built and the lock-in period is a very big positive for FDI in real estate, and we believe that affordable housing projects in general will benefit a lot from that. Also, REIT is an instrument which will give an alternative for a household to save money in real estate. The pass-through status that has been given to REIT will help this industry become a saving instrument for small investors in the long term.
Like you mentioned, the thrust on building 100 cities and the vision of housing for all by 2020, are these expected to throw up big business opportunities for you?
Beneficiaries of all the measures that have been announced around tax exemptions on home loans and the investment in new smart cities and the urban infrastructure budget allocation, which has been increased by almost 100%. So existing cities will also benefit. So all this will allow more affordable housing and real estate projects to come up in cities, and will spur the demand for these housing units. So clearly housing finance companies are the biggest beneficiaries of this budget.
And the capital gains tax exemption is for reinvestment in only one residential house. This clarification was issued in the budget itself. How does that clarification actually impact you? Is it possible for you to give us a bifurcation? What percentage of your customers actually are reinvesting in one residential unit and the rest?
The reinvestment into only one residential property put some caps, especially in view of that younger and younger people are buying homes. So if you look at the demographic patterns, then people now in age of group of 25 to 30 years are buying their first home. But typically this residential unit is smaller in size. So for example, in Mumbai, it will be typically one bedroom, hall, kitchen kind of a configuration, which within 3 to 5 years, this aspirational couple would move to a 2-bedroom hall kitchen kind of a configuration. Now, clearly, they would lose out if at a later date, let's say 10 years down the line, they want to move up to a 3-bedroom, which is, again, an aspirational goal for a lot of people. But clearly, in short term, and then the way our demographics are placed, there is no immediate impact of this on a large segment of population which is looking at buying a house.
Right, and even the tax limit has been changed as far as debt mutual funds are concerned. It has been hiked from 10 to 20%. How does this thing impact you, and how much do you deploy on this, and how much do you borrow in this particular segment?
See, debt mutual funds, our investment is in the growth scheme, which is not impacted by the new regulation. So 100% of our debt investments are into growth schemes. However, debt mutual fund, as a whole may suffer some kind of a dislocation. I do not see money really moving away from debt funds, but a lot of people had invested in instruments like fixed maturity plan, FMPs, which typically had a 13 to 18 months kind of maturity. There the tax benefit goes away. So clearly people will now move that money away from those instruments, and either they will put into the long-term 3-year debt instrument, or this money may be distributed across other financial products available in the market. but as a whole, the pool of liquidity, if you look at even today, 2/3 of debt investment from corporates are into the growth schemes. So that no impact is there. So only 1/3 of money is in dividend schemes of mutual fund. And we believe that most of this money is for daily use of corporates, and it will be difficult to move this money away from mutual funds. So we believe while there will be some dislocation in terms of reallocation to different segment of debt within the mutual fund industries, there will not be large outflows of money. But I must mention that bond market is something which is still in infancy in our country, and it needs to develop quickly. And these measures, put another spoke, so they get delayed further. So clearly, debt market development takes a back seat by these regulations.
Specifically to your company, how much will be the impact on the cost of funds?
There has been a recent spike of 10 to 15 basis point on the money market instrument side, but we'll have to really wait and watch how it really pans out. With next 2 to 3 years interest cost looking to come down, there should not be a large impact. 1/3 of our borrowings is from money market, debt market. So if you factor in even 10 to 15 basis point overall cost going up, there will be a minimal impact of around 4-5 basis point on our cost of funding.
Now, talking specifically about your company, the recent announcement of group reorganization, can you talk about that? What does it mean for you?
See, it has been an amicable reorganization, and it was in works for some time. So clearly, promoters have split the businesses which they were personally looking into. So it gives more focus for each of the promoters to look after the businesses they were handling on day-to-day basis. So for a housing finance business, it's a big positive, as Mr. Sameer Gehlot will be able to devote more time to the business.
Right, and now it's going to be a lot of focus, especially on the housing sector in particular. What market share are you looking forward to capture in the home loan market?
Currently, we have around 5% of our 5% of industry's market share with Indiabulls Housing Finance, and we believe we should be able to maintain it or marginally increase it going forward.
All right, so there you heard the management of Indiabulls Housing Finance talking about their plans going ahead and the budget. What does it imply for them? Moving on, let's get some brokerage calls now.